Good morning. This is Roger Lazarino with Mid-Florida Realty and FloridaDownPaymentAssistance.com. And this morning we're going to talk about the 11 things that you should know about bank accounts and credit scores before you start the home buying process. So we're going to talk about bank accounts first. First thing is, do not overdraw your checking account in the 12 months leading up to the mortgage loan application. The underwriters are going to look at your bank statements, and the statements are going to show them how many times you've been overdrawn in the past 12 months. And this can be the difference between being approved or not. Definitely don't let it happen more than twice in a year, because the overdrafts are going to have to be explained in writing, and you're going to have very good reasons why you were overdrawn. This is especially true for applicants whose loan files aren't quite as strong as an underwriter would like. And I'm talking about files with lower bank balances, lower credit scores, payment shock, high debt to income ratios, that sort of thing. So be very careful. Do not overdraw your bank account. The money in your bank accounts has to actually be seasoned. Seasoning means it must be in the same bank account for at least 2 complete statement cycles. So my advice is to actually try to have the money in the bank account for 3 complete cycles, just in case the underwriter wants to dig a little bit deeper. 2 cycles is actually the government agency and the Fannie Mae guideline. So verifiable income can actually be a deal stopper, especially on down payment assistance loan programs for first-time home buyers. So again, be careful. The other thing is, don't just drop money into your bank account unless you have good reasons, such as like your IRS tax return refunds, consistent payroll deposits, alimony, child support payments, retirement annuity income, Social Security award letters, that sort of thing. These are all acceptable sources of income when applying for a mortgage loan. And these forms of income can all be paper traced back to reoccurring sources of income. So the underwriters are going to want to see all of the documentation. So again, be careful and be very transparent. Now let's talk about those credit scores. Per lending guidelines, all lenders use the middle FICO score of the 3 scores pulled from the 3 bureaus. And the 3 bureaus are TransUnion, Experian, and Equifax. This credit report is called the Lender's Tri-Merged Credit Report. The highest and the lowest scores don't matter at all. They only use the middle score. So if you've got a 780, a 620, and a 685, they're going to use the middle score, and that's going to be the 685. The minimum FICO score on an FHA loan in order to pay 3.5% down is actually 580. And at 580, that loan does have to be manually underwritten. And you can also expect to pay a little bit higher interest rate than if you have above a 620 score. Generally speaking, with credit scores anyway, the higher the credit score, the lower the interest rate that you're going to have to pay, because there won't be any pricing adjustments. If your credit score is less than 620, the loan is probably going to have to be manually underwritten. And a lot of lenders don't even manually underwrite loans anymore. So again, you're going to want to try to get those credit scores up as good as possible. And we've got several different ways to make that happen. And of course, you can call one of our LOs at our company, and we can help you, guide you through that. And if we can't help you, we'll refer you to a credit repair company. So let's talk about low credit scores and down payment assistance programs just for a second. I'm not going to get deep into the different down payment assistance programs, but you need to know how scores affect these. So almost all of the Florida Down Payment Assistance programs, which are also referred to as DPA, will require a minimum credit score of at least 640 to qualify for an FHA loan version of a down payment assistance loan. While it's impossible to predict the automated underwriting results because of so many factors, for conventional loans, it's more than likely that you would need at least a middle score of 660 to be approved, but the higher the score, the more likely you'll be approved. That's obviously true whether it is an FHA or a conventional loan product. The higher the score, the better off you are. Another benefit to a higher credit score on a conventional loan is because your mortgage insurance will cost less. Mortgage insurance is based on a couple of things, and one of them is the credit score. The number that you would shoot for would be a 740 because that's the highest tier with the lowest conventional mortgage insurance rate. If you're using down payment assistance, you will definitely need to have a minimum credit score of 640. And again, obviously, the higher the credit score, the more DPA options that you'll have to use. We hope you've enjoyed our brief seminar regarding bank accounts and credit scores when you're beginning to think about purchasing a home and getting mortgage ready. Please don't hesitate to fill out one of our online applications on any of our websites, and we'll call you back to see what mortgage program is going to best fit your credit and financial profile. Several of our realtors are actually licensed Florida mortgage loan officers as well as realtors. And when you call us and you want an answer, we will pick up the phone. Thanks again, and we hope to hear from you soon.